Recently, when you got petrol for your vehicle, which petrol pump did you go to? Indian Oil, PPCL, HPCL or some other? Don't remember? Let me ask you another question. Next time when you go to any petrol pump for your vehicle, which petrol pump will you go to? Are you saying how does it matter? Perfect answer. Now let's understand the concept of commodity stocks. Hello investors and welcome to the brand new video. Before I talk about commodity stocks, I want to share one approach of stock investing. If you see the title, it says why I avoid commodity stocks. Now, there are two ways to invest in stock market. One, you look at reasons why you should invest in a company. Two, you look at reasons why you should reject a company. Now, how do they differ? Let's assume I give you 200 stocks and ask you to select some stocks out of them based on your research, based on the reasons you have to select those stocks. Most likely you'll come out with maybe 10, 20, 30, 40 stocks which are good stocks, and you have some set of reasons why you should invest in those stocks. Out of 200, maybe 10 to 30 to 40 stocks. Now, I give you the same set of 200 stocks, and this time I tell you, come up with reasons to reject the stock. Now, this is where it gets interesting. Most likely, you'll end up rejecting 195 to 199 stocks out of 200 because you will find one or two reasons to reject a company. Now, that one company out of 200 which you are not able to reject, that's a fundamentally sound company. So just by changing the approach from selecting stocks to rejecting stocks, your number of stocks goes down drastically and they are more fundamentally sound. Your portfolio is more fundamentally sound. Yeah. So this approach has worked really well for me and I wanted to share this. Now, coming to commodity. First of all, let's understand what exactly is a commodity. Any product which can be easily interchanged and which cannot be distinguished, it's called a commodity. Simple example I took in the initial part of the video. When you go to a petrol pump, you don't care which petrol pump you're going to. Whichever comes on your way, you will simply take your car or your vehicle or two-wheeler there and you'll get the petrol, right? Because the price of the petrol, the quality of the petrol, it's the same across all the companies. That's why petrol or fuel is a commodity. When you cannot distinguish between two products of two different companies, it's called a commodity. Announcement for last video's winner. The name of the winner is there in the description box. A big congratulations to you. Your book will be delivered to the doorstep very soon. Please do read the book and share with us on the email how did you like it. For the other investors, other viewers, there is another quiz link in that description box in the below. Just check that link. This link is there in the box only for next 72 hours from the time we upload this video. Watch this complete video. Take the quiz for your learning purpose and you may end up winning a book as well. All the best for that. By the way, I created a video recently on why you should avoid government companies or PSU stocks, right? Since we are talking about Indian Oil and BPCL and HPCL, just check the description. There is a link to the video in that description box and you can go and check that video after watching this one. Let's get back to this video. So apart from oil companies, for example, metals are commodities. Aluminium, steel, commodity. Mining products, for example, coal is a commodity. Agricultural products, wheat, rice, sugar, commodity, right? So fuel, we already discussed, is a commodity. So wherever you cannot distinguish between the two products of competing industry, competing companies, that's essentially a commodity. Now, what's the problem in this? Why do I avoid commodity stocks? The simple reason is the net profit margin or the margin in the business of a commodity stock is quite low, relatively low compared to other industries. Why so? The reason is very simple. When you cannot distinguish between the product, you will not pay a higher price for product of one company compared to the same product of another company, right? You will not pay X rupees for petrol on BPCL and X plus 10 rupees on HPCL. Yeah, you will, and that they have to be competing with each other, and they can't really increase the price of their product saying that this is a higher quality product because it's actually a same quality. Yeah, so that's where the problem is, and that's where the net profit margin which is simply net profit of the company divided by sales. For example, net profit of the company is 5 rupees and the sales of the company in the same year is 100 rupees. So 5 divided by 100 is 5%. So typically, all these commodity stocks, you will notice, most of them will have net profit margin of around 5% or below that, which is not a very healthy margin to have, because when you have unfavorable circumstances in the industry because of the competition, because of maybe government regulation, maybe because of COVID or some other situation, these margins are already so low, they go further down and company goes into losses. Yeah. So such companies where the margins are not healthy, they can't really sustain profitability for a very long period. They keep on firefighting each year to maintain their margins. Let me give you one example. Let's say Maruti is developing a car, making a car. Now they want some raw material. One of the major raw materials for making a car is steel. Now Maruti can get steel, let's say from SAIL, Steel Authority of India. It can also get steel from Tata Steel, and there are other companies as well. Now, for any of these companies, Tata Steel, SAIL or JSW Steel, anyone, Maruti is a big customer, volume customer, right? All of them want that Maruti becomes my customer. So what do you think they will do? General business practice, what do you think they will do? They will go to Maruti and try to give them the best offer, better offer compared to the competition. Yeah, and the offer can be better in many ways. One of the ways, of course, is pricing. Second is how soon you make the payment. So one company can say you can make me the payment after 90 days. Yeah, you take the product, you get your supply, you pay me after 90 days. The other company says I'll give you the same pricing, but you pay me after 120 days. Yeah. Now, if you are getting payment delayed, that also is impacting your margins. That also is impacting your financials, right? But to get that sale from the perspective of the suppliers, SAIL and Tata Steel, to get that sale, to get that business from the customer, they do all these kind of negotiations, right? And Maruti is like in a very comfortable position. They can negotiate with the suppliers and vendors and get the best deal out of them. Why? Because they are a big customer for all of them. Okay, check the screen now. You can see Steel Authority of India. Let's go down and we'll check the net profit margin. Look at this, net profit margin 5.98. Previous year it was 4.29. As I said, it is close to 5%, and they keep on struggling and firefighting to remain in a good range. Now look at other companies. Tata Steel 5.49, 5.42. Look at this 3.3 and 4.80. Yeah. Jindal 2.93, 0.45. Jindal Stainless 7.09, 4.13. 3.01, 4.36. There's one exception. Look at this, JSW Steel. It is not bad. Last year it was 6.12, this year it is 9.95. So as I said, there can be exceptions, but most of the time when you look at commodity companies and you look at their say 5-10 years of data of profit margins, they will be fighting to stay above 5%. They might go above 5% sometimes, but again they will come back to that range. Yeah, which is not a healthy margin to have. Now the next question can be, how do you identify whether it's a commodity stock or not? Very simple. Place yourself as a consumer and think, when you are buying that product, do you distinguish between the products? Do you distinguish between two brands? Do you prefer one brand over the other? Yeah, if that is happening, then it's not a commodity, because you can distinguish the product. You can choose one over the other. For example, let's say you want to get paint done. Now you will not go and tell to the shopkeeper, give me any paint. Yeah? You will say, I want Asian paints, I want Berger, I want this, I want that. You have preference. Why? Because there could be, it could be based on quality, it could be based on pricing, it could be based on the brand of the company. Yeah? Similarly, any other product which you are going to buy, just look at as a consumer, are you distinguishing between the products? If you are, it is not a commodity. If you are indifferent, कुछ भी दे दो, कोई भी दे दो, give me any product in this range, that's like a commodity product for sure. Yeah. Another point, lot of companies, I would say most of the manufacturing companies have some of the raw material as commodity. We just took the example of Maruti. Now in this case, steel is a commodity, but Maruti as a company is not a commodity. Why? Because they're using the steel and other raw materials and engine and all those technology to build a car which is a value-added product. And the car of Maruti can be distinguished with the car of say Honda or Tata or any other brand. Yeah? So you can choose between which car you want to buy. Yeah, you don't go to a showroom and say, give me any car. Yeah. So Maruti is not a commodity. Another example, let's say Britannia. They will use, for example, they are making biscuits or cookies. They will use sugar as a commodity, as a raw material, which is a commodity, but they are producing something which is a value-added product, and I as a consumer will choose whether I like this biscuit or that one, and which taste is better or which quality is better or which pricing is better maybe. Yeah. So when I'm distinguished between the products, that product and that company is not a commodity company, but when I'm not able to distinguish, then it's a commodity company. I hope this concept is clear. Well, that's all for this video. So I shared two broad concepts with you today. One, stock investing is about rejecting stocks, and two, why I avoid commodity companies. I hope you got value from this video. Please like, share and subscribe, and see you next time.